And it is time for the word on Wall Street. Top investors watching your money. Joining me right now is Michael Lee strategy founder Michael Lee. Also with us, Mitch Rochelle. Great to see you, Mike. Thanks for joining the conversation. Happy Monday. I want to look at futures this morning and tell us what you're thinking about these debt ceiling negotiations. President Biden and House Speaker Kevin McCarthy going to be talking again today, and it looks like the president has admitted that he will have to cut spending, but he wants a revenue raise with it. The president says he has the authority to challenge the debt limit, but believes it cannot succeed in time to avoid a default. Meanwhile, Treasury Secretary Janet Yellen says the chances of the country paying all of its bills by June 15th are quite low. Your thoughts?
Yeah, well, Maria, the Biden administration, they stuck their heels in and said they're not going to negotiate in any way, shape, or form, and basically hoping that the GOP Congress would cave, and that hasn't happened yet, and it doesn't look like it's going to happen. The GOP, led by Kevin McCarthy, is making the point that we are now $32 trillion in debt with an $8 trillion Fed balance sheet. This is far different than every other debt ceiling negotiation we've looked at. And it's important to clarify that the chances of the U.S. defaulting on the debt without a conscious decision by Janet Yellen to do so specifically are close to zero, if not zero completely. There's more than enough revenue coming into the Treasury to not only cover debt service payments, but Social Security, Medicare, and the entire defense budget. So what's going to have to happen until they come to some sort of agreement is a prioritization of payments, which is what Janet Yellen does not want to do. She does not want to get into, but that's part of her job. Okay, and it's crucial that we address the spending problems that the U.S. is going through right now. We are in an inflationary supercycle because of these spending problems. This has crushed the economy. It's the reason why interest rates are up over 5% right now. And then also, from a Janet Yellen and Jerome Powell standpoint, they decided to make the claim that they can backstop all depositors at every single bank in the U.S. In the midst of a banking crisis. So, look, this money printing has to stop. And if it doesn't stop, we could see a prolonged shutdown.
Yeah, what is that, about $18-19 trillion, Mike, if you want to backstop all deposits at all banks? We have that kind of money, right? $19 trillion to backstop all deposits?
It's not realistic. It's not feasible. And when there's small banks in the middle of America that start going under because of the crisis we're in right now, are they going to get the same bailouts that Silicon Valley Bank and their Democratic donors got? And I don't see how that's possible or how that's going to happen going forward. But look, this is a mess of the Biden administration's own creating. And kudos to the Republicans for finally taking a stand and fighting for the future of the U.S. dollar.
Yeah, Kevin McCarthy is doing well, pushing forward. He keeps saying that we have a spending problem, not a revenue problem. But Mitch, Joe Biden dusted off his old saying that worked so well with the populace yesterday, and he said, you have to pay your fair share. He wants to raise revenue through tax increases. What does that do to an economy that is slowing? We've got a busy week of economic data this week. We've got the housing data for April on Wednesday. We'll get the Federal Reserve May meeting minutes on Thursday, and then we get the second read on first quarter GDP. And then on Friday, we get the April durable goods and PCE index, Mitch. It's a busy week. And the priority one is probably these talks between McCarthy and Biden.
And I think also the last item you mentioned, which is PCE, which is the Fed's preferred measure, it's still, core PCE is expected to come in year over year a little over 4%. So that's 2 times their target. That's the last PCE reading that we're going to get prior to their June meeting. And the question really becomes, what are they going to do in June? Are they going to continue to grind down the economy with higher interest rates, or are they going to pause? And you heard Neil Kashkari last week from the Minneapolis Fed say maybe pausing is a good thing right now. So I think, and you also, by the way, Maria, this week have a spate of earnings in the retail sector with Kohl's and Lowe's and Best Buy and Costco. So we're also going to get a feel for how the consumer's holding up in this period of higher interest rates.
Yeah, it's a great point, Mitch. And what is your assessment of what we heard last week from some of the big names? We had Walmart, we had Home Depot. I thought it was interesting that Home Depot and Target talked about theft. Target is going to put $500 million for expectations for theft. They're calling it shrinking inventory.
Yeah, what's really interesting is, Mike was talking about the banking sector. So when you loan money for a living, you put aside money for bad debts when people don't pay. When you loan money to your customers and you have receivables, you put aside some money for bad receivables, right? That's normal business. Now we've gotten to this cycle where it's acceptable to put a stash of money away for theft at the retail. Listen, there's always shrinkage, there's always shoplifting in retail, but to have it be that big of a number that's disclosed without people screaming, like where are the ESG folks right now screaming that we have this hole in the P&L because inventory is walking out the door?
Yeah, really sad stuff. Michael Lee, good to see you. Thanks for weighing in this morning. Mitch, you're staying with us all morning. We're grateful. Thanks, gentlemen. Much more ahead this morning. We've got a lot coming up. Debt talks.